Someone leave a chat. I'm just trying to get used to this StreamYard. And I have an idea I wanted to tell everybody about. Because I want to figure out how to use the Excel spreadsheet and see comments while I'm using it. So just people write in the chat, because I want to see how that works. So somebody leave a message or write something in the chat. I just want to see. Okay, hello. Okay, I see that. Write a few more things. I just want to see if I'll be able to see your message while I'm on the Excel spreadsheet. I don't think I can. I gotta figure this out. Damn. I guess I could keep it. Okay, I think I'll just have the Excel spreadsheet not fully open so I could see the chat. I'm surprised there's not a way to pop out the chat. So this is my sheet before I add anything to it. And then this is the next video I'm doing. So the sheet is pretty much prepared for the video. I still need to do the free cash flows on this one, and I have to add. We've got to pop out first. What does that mean? You always got to pop out first. I can pop out chat by clicking the top 3 buttons. Yeah, I'm on StreamYard, not YouTube. The 3 little dots on top right. Yeah. Yeah, I don't see the dots because I'm on StreamYard. There has to be an easier way. Okay. Does anybody have questions on the Excel spreadsheet? I could show you it. What? So my plan is I'm going to contact companies, and I did contact one company, the CEO of a company, of a public company, and I think we're going to live stream together, and I'm going to go through my Excel spreadsheet with him on the call, the CEO, and go through his financial statements, and then he can explain it obviously in more detail than I can because he knows the background of his company. That's the plan. That's why I got the live stream thing. I think it should be good because there's a lot of things, like, I don't know, I can't really explain. I just understand the fundamentals of it, but he could kind of explain the nuances of like the financials and obviously what his company does. But I don't want to say the company because I didn't ask him yet. I just had a conversation with him the other day about doing something together. And I don't know if he'll live stream with me, but he wants to do a video, but I just want to confirm that he wants to live stream before I let everybody know what company it's going to be. But if it's good, like if it's a good video, like I think it is, then I'm going to reach out to other companies. And I'm sure that I won't get the CEO to live stream with me on most companies. It'll be like the person in like in marketing or investor relations may be the one. Certain companies, the CEO is just too important. But does that sound like a good idea? I think it would be really interesting to hear the actual someone at the company while I'm talking about their company. But I don't think I'm going to value the company like I do, because I'd feel a little awkward valuing it, especially if I say it's overvalued. So I'm just going to talk about everything except the valuation part. Like I'm going to talk about like all their financial statements, the ratios, and then people can ask questions, like in the chat, which I think will be really helpful, because a lot of people, I'm sure, as they're watching videos, or any video you watch, you have questions, but you really don't know why certain things. So you just kind of like have to let it go. But if we're doing it live, then maybe you can ask that question directly. So I guess I could go through the Excel spreadsheet. I mean, yeah, I appreciate all the positive comments. The way I created the Excel spreadsheet, asked him if ahead of time if I can value. Maybe. The thing is, with a DCF model, and the reason I don't like giving it out is because it's not that like it's so personal, the information, because the way I built the model was just watching other YouTube channels and just using, I had some knowledge on it to begin with beforehand, but I never really built out a DCF model from scratch. So I just watched videos and what other people said on the video. Yeah, I'm not going to give it out. So I just created it based off of watching other people's videos. And it's just gotten, I think it's gotten a lot better, a lot more streamlined from doing 700 videos. But the thing is, a DCF model only gives, I think, a decent result for like, I would say 5% of the companies out there. Like 1 out of 20, it will give you at least somewhat of a decent result. Like a Microsoft, a Google, companies with positive and consistent free cash flow, revenue, and profits. A company that loses money, you can't do a DCF model. It's really guesswork. I'm kind of guessing. And I mean, anybody's guess is as good as mine, really. Like, because I don't have a crystal ball. I'm just kind of, I try to use some logic. Like I try to look at other companies. That's usually, the main thing I do is I look at analyst estimates, but I don't like to rely on analyst estimates, but I do look at that as like kind of a benchmark. I look at similar companies, but every company is so unique. even if you looked at Pepsi and Coke, you think the products are identical, right? I mean, they're so similar products. I think, but if you look at the company, it's so different. If you look at the assets within the companies they own, they don't just own Coke and Pepsi. They own so many different companies, and it's so unique in their own way. So no company, the only companies that are kind of similar are kind of commodity-based companies, like certain oil and gas companies in certain areas. Like those are usually pretty consistent. Like if you mine gold or you mine copper, those are usually pretty similar. But even those have differences too, because certain mines are better than others. So it's so hard to compare two companies. So I mean, it's like I said, it's a lot of guesswork. But if anybody has questions, this is a good time. Exit multiples. What does that mean? Exit. You mean like an exit strategy? I never heard of that before. Like you mean like the liquidation value of a company? Is that what you mean by exit multiples? Thanks a lot, Joseph. I appreciate all the nice comments. I mean, I'm pretty confident that the only way to value anything is the cash flows it generates. So if you buy something that will never generate any cash flow, like the expenses will always be higher than your revenue. Like a supermarket, everybody knows like a supermarket has really thin margins, like 1 or 2%, right? So if a supermarket cut its prices like 10%, it can't make money because it was only at 1 or 2% margin. Maybe I don't want to get too confusing, but yeah. So anything you buy, whether it's a bond or you buy a business, a physical business and run it, or you buy a stock or you buy a mutual fund or an option, anything, whatever cash flows it could generate, that's what you want, because that's why you invest, for cash. So if you put $100 into something and you get $20 back, that's a 20% return. But that doesn't mean every 20% return is the same, because there's 20% returns that are more guaranteed than others. Like yeah, I'm still not sure what exit multiples are. Do you think the telecom space, Bill Plessor, is going to hurt from the CRTC decision? I don't know. I'm not too sure about that. I mean, you know, a lot of the news out there, like, I don't know. I mean, I could throw out my opinion and just throw out an opinion like most people do, but I'm really, until you look at the numbers, you can't really get much information. It's just all guesswork. It's just kind of like most YouTube channels. It's just like kind of like fluff. They're just talking a lot, and there's no like concrete information. It's just a lot of like it sounds good. Most people do. Oh yeah, that's what I thought you meant. Like the liquidation EV. I think DCF definitely, because you generally don't buy a company to liquidate it, or unless it like has a lot of assets maybe, and that's really what you're buying into. But yeah, but generally you invest in companies for the future cash flow stream. But it's very complex. It's not very straightforward. It's very convoluted. It's like a big puzzle, and there's no real answer, one answer. Oh, Canadian Pacific. Yeah, I mean, that looks like the KSU, the acquisition of KSU. It did look good. I think I did mention that in my video, right? I talked about that, my Canadian Pacific video. But anytime there's an acquisition, you have to remember, like it's like you're paying to get revenue. Like you're spending and usually pay a premium, usually pay above the asking price. So you have to pay a premium to get that revenue. Where a company like Apple can generate a ton of revenue, and they've done it mainly organically without any, I mean, they acquire companies, but they don't ever acquire really for more than the net assets. Because that's how goodwill gets on the balance sheet, right? It's what you pay minus the net assets. So if the company's worth $1 billion, you pay 1.5 billion, then you put 500 million as goodwill. I mean, if you think about it yourself, like, is growing through acquisition the best? Some industries you have to, like, you can't really, like the railroad industry, you can't just like lay down tracks outside and then start a new rail. You know, you kind of have to acquire because it's a finite space. But I think if you can grow organically in most businesses, you're better off. Because I don't think acquiring companies like is a great thing. Sometimes it is. It's kind of like it's not positive or negative with me acquiring another company. What happens after they acquire them will prove whether it's a positive or negative. But just buying a company and laying out all that money, Gladstone, Land REIT, I don't know. I gotta do a video maybe. I like Nokia a lot. It's a meme stock, but like AMC is garbage. I mean, but Nokia is a real company. I mean, AMC is a real company too, but it's really way overvalued. That doesn't mean you can't make money. Has anybody been investing in like the meme stocks like GME, AMC? I'm telling you, Robinhood, that's going to be $1 trillion stock. I'm too scared to put money into it, but it's going to get pumped up so much. I have a feeling it's going to be like the ultimate pump, Robinhood. Diversify. I mean, I'm not a big fan. I don't really think about diversification, even though that's kind of like the buzzword or kind of like to sound knowledgeable. You say you got to diversify, but I don't mind putting a lot into one thing if I'm really confident, like you did your homework. But if you're not confident about things, then I would do mostly ETFs and put maybe like 2% in, like maybe like 10%. You could spread it across 10 stocks just to learn. But it's hard. But the best way to learn is to put money down and lose it. You'll learn 10 times more from losing money. I lost on a UCO and USO like 40,000. I didn't understand like the structure of those. Like they just the decay risk from the I did a video. That was my first video on USCO, USO. I mean, it's not a good video, but because of my first. I don't really have a normal job. I just work. I have a business. It's called that's my business. It's a franchise. It's just teaching kids in math. So I usually go there from like just like I just go during the week from like 2 to 5 p.m. usually. You can read about me too. You could read like about my background and things like that. Oh, AQN, Algonquin. Yeah, I like Algonquin a lot. I used to work on Wall Street. I used to be a bond trader. I graduated college in '98, and I worked in Manhattan because I'm from Staten Island. So I worked in Manhattan from '99 to 2012. And I'm being honest. I didn't learn anything that I'm talking about now. I learned hardly anything working there. I learned about certain things within the bond industry, but like to learn about like reading through financial statements, it was just all on my own. And I'm not like bragging, but I didn't really learn anything. I got my MBA, my undergrad. I learned anything through school. Almost nothing. I would say maybe 1% of what I learned. You know what I learned the most from? The only thing I really learned is when I went to take the CFA, and I did level 1, but I didn't get my CFA. I just did level 1. I didn't get complete level 2. I ended up just going to grad school. I learned almost a ton of stuff from studying for doing level 1 in the CFA. That's a lot. I wish I could have completed it, but I just went to grad school instead. I had a hard time the second level. So, but if you can you can find like used books online. It's hard to really. I spent like a few hundred hours studying for that test, but that was where I learned most of my like financial skills, like not Excel, like reading financial statements. But doing these videos helps a lot. Yeah, 90% is S&P 500. That's fine because I should show you my portfolio. Hey, wait, I'll open up E-Trade. Let me log in. One second. It's so hard to log into E-Trade because I have like this key code on my phone that I have to enter, like a second security feature. Okay, here it is. I use like linear regression channel to gauge entries. So I remember a few months ago when I shared my portfolio, somebody said, you don't invest in these stocks you talk about. You talk about stocks so much, but you only invest in ETFs. And I was like, that person's right. I'm going to start putting my money where my mouth is, so to speak. So it's hard to get money. It seems like every time I save money up, I have to buy something, like something breaks or have to pay taxes. It seems like so hard to get money. But so I'm starting a new account, just like a riskier account. So I'm going to put $10,000 into each trade. So I bought Appsolera. So that's my first trade. So I have 10,000 in that. That's already down 6%. But this is what I want to show you. Like, I bought most of these in 2017. Like, I try to hold a long time. And that's not even that long. It's just I had to transfer this over from my old brokerage. So I had to buy everything back. But anyways, that's what I'm saying. I buy something like Berkshire Hathaway for $280,000, and now it's $420. It looks great, but it's still it's doing a lot. It's doing worse than S&P 500. I mean, there's nothing wrong with the S&P 500. I'm up 83% on the S&P 500. I'm up 60% on Berkshire Hathaway. I should have just put it all into S&P 500. I would have been better off. I would have got an extra 20%, right? Of course, nobody knows this, but if you're concerned about what to invest in, just do S&P 500. There's nothing wrong with that. And then just follow the market. It's fun to follow. And then if you see something really good, that's what I used to do. Like if I saw something really good, I would just drop like 20,000 or 50,000 into it, or buy some options. But I haven't been doing that anymore. Options. I used to do that. So obviously Facebook is doing the best, but yeah, I would have been better off with S&P 500 than Berkshire. I mean, and then see, I try to diversify that. So I put into this account, everything goes into Vanguard Total Index Fund, which is the world fund. Like it's all around the world. I think it's half US and then other countries, which is 50% is okay. But like I said, I would have been better off with S&P 500. So if you just do that, you don't have to worry about anything. In Microsoft, I think there's certain stocks I wouldn't hesitate to buy, regardless of where they're at. Like Microsoft, Google, Facebook, certain stocks that just you can't lose really. Like if you look at any 6-month period or any 1-year period, okay, see Lubomir. I think that's Lubomir. So yes, I was just doing this to learn. So I'm going to try it with that CEO guy, and then my next live stream will be with him. Lubov is love. Does anybody have questions on the Excel file while we're here? I could talk. I mean, I could tell you the formulas because that's how I figured it out. I just watched videos and I copied, and I made a bunch of mistakes in the beginning. I never said anything, but my first like 75 videos, the way I calculated the WACC, which is supposed to be a weight. It's a blend. It's a blend of the cost of equity and cost of debt. So in the beginning, even though the person I copied it from didn't say this, I just thought it was the equity on the balance sheet. So like, how some companies have negative equity, so they'd be 100% debt in that case. So their WACC would be equal to the cost of debt, which would be the interest rate times 1 minus the tax rate. But the traditional way to calculate the WACC is the market cap is the weight of equity. So you look at the market cap. So if the market cap was like, market cap debt. So if they were, no, I did have rental properties when I lived in Manhattan, but I don't anymore. We sold them and we bought a house here. Yeah, I use CAPM for the cost of equity. So if the market cap was $1 billion and the debt was $1 billion, this is just simple numbers, but the cost of capital for market cap was say 10%, and the cost of capital obviously we can do this in our heads. It's 8% the WACC, but I'm just showing you. I changed the numbers. Obviously, it's 8% the WACC because if you have a market cap, well, just look at my video. My 10,000 subscriber reveal. I went through all my. So if the market cap's $1 billion and you calculate the cost of capital like that, like AM said, I use a capital asset pricing model, but I use a blend of different models because I've noticed that sometimes the WACC gets really wonky. Like it's like 3% or 18 or like 30%, which would be ridiculous. So I try to use different models and a blend of different models, but I'm going to keep it simple. All right. So if the market cap is $1 billion, debt is $1 billion, and the cost of capital for market cap is 10%, and debt is 6%, it has to be 8%, right? But if debt was, say debt was $500 million, now it's 8.7%. It leans more towards the 10% because it's heavier. It's heavier weighted. But this is the one thing that bothers me the most about my videos is the weighted average cost of capital. I try to really delve into it more, but I still have a hard time coming up with appropriate WACC. I always question it. The WACC is weighted. Like you see, I did market cap. Market cap is the same as equity. It's a blend of, the WACC is a blend of cost of equity, which is market cap, and cost of debt. So to get the WACC, you would have to calculate your cost of capital for your market cap, which is your equity, right? And you have to calculate your how do you calculate the cost of capital for your debt? Does anybody know? That's a lot. That's very straightforward. That's much easier. But how do you? Does anybody know how to calculate the cost of debt? I just threw in 6%, but there is a simple formula for calculating the cost of your debt. No, nobody? I'm sure somebody knows. Yeah, it's just the interest rate on your debt. Say you pay 5% interest on your debt, but interest payments are tax deductible, right? Because you remember when I go through the income statement, interest expense comes before net income, so you get a tax deduction. So you do 1 minus your tax rate. So say your tax rate is 30%. So you would do 70%. So your cost of debt would be 3.5%. If you pay 5% interest on your debt and your tax rate was 30%, then your cost of debt is 3.5%, since you get that tax deduction. But it's a cost of equity that I really don't feel comfortable with. I use the capital asset pricing model, but I'm still. I mean, that's keyed off the beta, right? The higher the beta, I don't know if this will be available again. Maybe. But thanks for joining. So we could just plug in the numbers. You could see how my WACC is calculated. I kind of wish I did a different sheet. I don't know if I saved this before I started this. Oh, what's going on? Okay. I hope I save this. Shit. Let me save it as something else, just in case I didn't save it earlier. What's my background? Can everybody? So it's pretty simple. The way I calculate it. So you could ignore. to remove this so it's easy to visualize. Oh boy. I just plug in all these values. Maybe I shouldn't remove that. Okay. So let's just say, how much interest do they pay on their debt? The annual interest. So I just take that off the income statement and say it's $1 million. So it goes here, $1 million. Let's say they have 20 million of debt. $20 million up here, total debt. That's what I show in the video. I kind of black out everything else so it's easy to see. Okay, thanks for coming. And then I have to enter their earnings before taxes, EBT, or pre-tax income. So say that's 50 million. And let's say they pay 20% in taxes. I just pull this off the income statement, and then this is how it populates my model. So now I have the weight of the cost of debt is 4%. And to get the cost of equity, I need to enter the market cap. Say 1 billion shares outstanding. A billion shares outstanding and $10 a share. So 10 billion market cap. $10 billion market cap. Oh, these are billions, these numbers. It doesn't matter. And then I just enter the beta. Say it's 0.87. I guess I don't need anything. I don't need this up here either. So it's pretty simple how I come up with the beta. You can see how low the WACC is, 0.87 beta. But if you just raise the beta to like 1.2, it goes up to 6.51. But sometimes you see betas of like 3, and that's what I was talking about earlier. Like sometimes it just doesn't make sense using the capital asset pricing model. If it has a really high beta or really low beta, the numbers don't make sense. I don't know. Maybe it's hard to explain. No, I didn't buy Coinbase. Unlevitator, yeah. Yeah, there's so many different ways to do it. I've tried different approaches. What were your questions? I haven't. I don't know my percentage returns. I mean, I know what my percentage returns are in each of my investments, but I don't know as of 2021. Like I didn't look at my dollar value in 2021. It's probably similar to the market because I'm mainly invested in the market. I'm getting killed on Momo, Baba, Baidu. I think they're good investments. Okay, yeah, thanks for coming. Maybe I should have prepared better. Let me just look at my Excel file. Okay, good. I didn't. Hungary, nice. MFC, what's MFC? Manulife? Yeah, this isn't the best live stream. I didn't really prepare much. But I don't know if you just jumped on. The reason I'm doing the live stream, the reason it's called StreamYard. I paid for StreamYard subscription, the membership thing. The reason I'm doing this is because I'm trying to contact companies to see if I can do a video with them. And I got in touch with the CEO of a company. I don't want to say the company because so I think the CEO of a company, a publicly traded company, he said he wants to do a video with me. So so that's why I got this thing. So what I'm going to do is I'm going to go through my Excel spreadsheet like I do in my normal videos. I'm probably going to do it live. And then I'm going to ask him to talk more about things, because I can only say so much about the company, but he can probably talk much more in detail about certain things on the balance sheet, on the income statement and statement of cash flows, or especially to talk about what the company does in more detail than I could say. But the financials will be really interesting to hear what he says about it. So that's the idea. So my next live stream will probably be with this guy, the CEO of a company, and then you could ask questions because, if you watch videos, you can't really ask questions. I mean, the comments you can, but you're not going to get that instant feedback. But as you're watching something, you can ask the question, and hopefully, it'll start to make more sense. Yeah, I think it's an interesting concept, but I'm sure I don't think many CEOs are gonna get on a call with me. Probably if I do it other companies, it'll be like somebody in investor relations or somebody in marketing will maybe get on a call. Well, I would actually prefer someone in finance. So actually, because the whole point of the channel is kind of delving into the financials. So that's the idea of these calls, to get so they can explain the financials in more detail. Yeah, thanks a lot, Jacob. Appreciate it. So it would be really good. I already had a call. We had a Zoom meeting just the other day. So that's why I got this thing set up. Invesco, what do you think about HTO? Invesco is a good start. And I gotta look at their. I think I tried to do a video of them recently, but let me share the screen. They have negative revenue on Yahoo Finance. That's what I don't get that. Like, I think I understand it, but it's just so weird. So it's hard to do. Like, can you guys see that? Yeah, negative 1.8 billion from the loss. So they obviously invest in real estate. They're a REIT. So if they buy a property for, say, 5 billion and then sell it for 3 billion, they have to book the $2 billion loss. But I don't know why it's showing up in revenue. Like, I thought it would show up in other income and expenses. So that's why, that's why I couldn't do the video, because I don't like to do videos. Hey, Joel, is it Joel or a REIT? We're looking at a REIT right now. A REIT. A REIT. Not your friend, a REIT. A REIT, a real estate investment trust. Yeah, it's pretty easy to use StreamYard. So I'm going to reach out to that CEO and see if he wants a live stream. I didn't ask him if he wants to do a video. I don't know if he wants a live stream, though. But does this make sense to anybody? Is it just me? Like, how could you have negative revenue? That's like the one thing can't be negative is revenue. And it's confusing going through their 10K because maybe I'll do it again. Because they're part of a larger organization. So their financials are within. Yeah, I know we could pre-record. I thought about that, but I think it would be really good if we did it live because people can ask questions. And I think people will maybe learn more, or maybe people would jump on the live stream that aren't subs, and I can get more subs. Yeah, sometimes the financials are wrong. That's a good point. I've seen a lot of REITs with negative revenue, and it just takes so long to do a video going through the 10K. So I have to. It's so much easier Yahoo Finance. It's all laid out for me. So yeah, I mean, I don't have that much feedback on direct stock questions. I just don't feel like, I don't know. I guess I could give my opinion, but I do refer to the 10K to make sure it's correct, but it's too time consuming. Everything's in like the right format in Yahoo Finance, pulling all the data. But I do usually confirm it's accurate in a 10K. Morningstar? I don't know. I've heard of them, but I don't know. I've never used it before. I only use Yahoo Finance and the 10K. I should use other services, because sometimes it's like I did a video on who's that company? The Amazon of South Korea. Yeah, but I just did a video and I can't remember. Coupang. Yeah, I did a video on Coupang. This is really interesting. Yeah, I think this is a really good stock. I think I'm going to invest in this company. It's amazing how much better they've done it than Amazon. Like if you order from Coupang, it's only in South Korea. And you go to your phone and you could order something, anything, food. You can order like clothes. It's like Amazon, but it always comes the next day. Like if you order before midnight, the next morning on your doorstep, the package comes. Over 99% of the time, it's like 99.6% of the time, they deliver it within 24 hours. And if you don't like it, you could just put it back on your doorstep and they'll pick it up the next day. It's the best logistics, but it's in South Korea, which is densely populated. So you can do that. In America, it would be really hard because it's so big, America. Well, most countries are spread out a lot more. Oh, but I was saying, so I was doing Coupang, and I wanted to show historically Amazon's cash flows, because I wanted to show how, because they have a similar business model, because this company's losing a lot of money. They just IPO'd this year, and they're already at 65 billion market cap they just IPO'd. So they have a similar growth projection as Amazon. So I wanted to kind of show, but I don't like almost all the places I go to, it doesn't go back to the beginning of time. It only goes back like maybe like 5, 6, 7 years. Yeah. I use Bloomberg terminals when I used to work in finance in Manhattan, but they're expensive. It's like, I think it's like $5,000 a month or $2,500 a month for a terminal. But you I mean, I get almost everything I need from Yahoo Finance and the 10K. So that's why I rarely need like 20 years. I wanted to see Amazon's cash flows since '94, since they started. So it's hard. So I rarely need stuff like that, but once in a blue, it would be nice to have something to go to pull all that information. Okay, so it's an hour. I was expecting only 5 minutes. Oh, is Jewel still here? Oh, shit. I should have asked her a question when she was here. Because I have... The reason I actually did this, StreamYard, is because whenever I go to my Excel spreadsheet... Oh, yeah, Jewel. So whenever I go to my Excel spreadsheet... Like I mean, it's pretty easy to share. It's just that when I'm in my Excel spreadsheet, like when Excel is the entire screen, like all I could see is Excel. Is there a way for me to see comments? That's the reason. That's the only thing I couldn't figure out. Like, I could open Excel and make it like half the size, so I can see the comments. So I can have StreamYard and my Excel file visible on the screen at the same time. But I want to be able to have the Excel file totally open without StreamYard, but I can't see any comments coming in, so I can't respond to anybody. Yes, that's the thing. You won't be able to see the StreamYard. That's why we have our phones. Oh, okay. Yeah, that makes sense. A second monitor. Yeah, actually, that's a good idea too. Okay. I mean, that all makes sense. I just assumed there was a feature, like a pop-out feature, like in YouTube, where you can pop it out and then have it open at all times. But okay, I'll just do one of those things. I'm probably just going to do what I've been doing, is have the Excel file open, but only like 3/4 open, so I can see the comments. Okay, so yeah, I'm gonna go now. Thanks for coming for my first live stream, and yeah, it would be good to do these, and then we could have topics, like so I can prepare better and have like but yeah, let me know. Yeah, I'm going to definitely notify everybody when I have the one with the CEO. I'm going to give you guys more of a heads up. I think that will be really good. So hopefully maybe next week, actually. Okay, thanks for coming, everybody. I'm going to go now. I'll talk to you later.